Hello and welcome to the Smart Money Risk Management Workshop. I'm Savannah and I'm going to be showing you how to get amazing risk to reward when it comes to entering smart money trades. I'm super excited for you. I'm so happy that you decided to take this program because that means that you are having success when it comes to the basics such as finding the schematics, reading the candlesticks, understanding the chart, understanding market cycle, breaker structure, and more. And if you're still working on that, you can always go check out my other courses as well. But today we're talking about risk management because no matter what you do, even what strategy you're using, if you're not using the right risk to reward or the proper trade management, you're not going to be successful. I always tell traders it's important to get out the trade as much as to get in the trade. We can get in trades right now. We can all place random market entries, but it's actually on how you exit and monitoring your losses and how you lose. And a lot of times when it comes to new traders, they focus on making money, hitting that take profit. But listen, truth be told, you're going to hit stop loss more than you hit take profit. So that's why with our 1 to 10 method, we really focus on those tight stop losses and managing risk so we're not blowing accounts and losing money. So in this program, I'm going to teach you what it's like to trade smart money with 1 to 10 risk to reward and how to manage it properly, how to journal, and more. So make sure that you have your notebooks ready. I'm super excited that you invested in this program. So make sure you get the best value by taking notes, and let's get started. Lessons that this will cover will be lot sizes, risk to reward, confirmation checklist, MetaTrader 4 numbers, trade management, and journaling. So I'll quickly go over what all this means. And lot sizes, of course, we're going to talk about what lot size to use to get the consistent outcome each time. Risk to reward, again, talking about getting that consistent 1 to 10 trade. So that way you are trading small risk each time when you do hit take profit, you have a huge reward that allows your account to grow long term. The confirmation checklist is everything I look at before I enter a trade. So that is really important, or else we're honestly gambling if we're not looking at the actual data and value that we need to enter the market. MT4 numbers, MetaTrader 4 numbers, all this means is you have to understand your broker numbers versus what you're seeing on TradingView, and I'm going to explain in detail, but pretty much TradingView is just a website that presents data, and that data is the candlesticks that we analyze, but the numbers on TradingView might actually be different than the numbers that your broker gives to you. So I'm going to show you how to translate the data from TradingView to the numbers your broker actually uses, because when we're using a tight stop loss, we can't afford to be off by 1 pip. Next is trade management, so teaching you how I get in and out my trades, when I close my trades, partials, break even, etc. And last but not least is journaling. Journaling is so important because, like I said, you're probably going to be losing a lot of trades in your lifetime regardless. And it's important to learn from those mistakes, learn why you're losing. And a lot of times we say, oh, stop loss hit due to news, due to this, due to that. But the market already has a predicted outcome, and it's your job to figure out what you missed when it came to entering a trade, when it comes to losing a trade, instead of just saying stop loss hit because of this, and that. So I'm going to teach you how to journal properly, which most people don't know how to do, and a bunch more. So stay tuned, and I'm super excited for you guys to become more successful in trading by understanding proper risk management. Next is trade management. One of my most asked questions I get is, how do I manage my trades? And guess what? I don't. Okay, not completely true, but I generally let the outcome of the trade be the outcome. So I just pretty much set it and forget it. Now, I do manage a little bit, but let me explain further and why. I collect 90% of my trades at 90%. So this is my setup. I have a 8.5 stop loss, a 9.26 risk reward, and a 78 pip take profit, okay? Okay, so I'm going to set my alert at 90%. So as you see, I brought down my risk to reward to about 8.26. Before it was before it was a 9.26, now it's 8.26. So I measure that. A lot size is the value or quantity of a particular currency pair that you are buying or selling in a single trade. Lot sizes are used to control the size of your positions in the Forex market. Lot size is the most important thing when it comes to risk management, especially if you're trying to pass a funded account challenge. The reason why it's really important for funded account challenges is because you have tight parameters of how much drawdown you can take. So the more trades you... First, you must define your risk. You should only risk 0.5 to 1% of your account per trade. Using 0.7% is the best. Why? Because when you use 0.5%, it can be too little, and you may not be benefiting as much as you want to from a 1 to 10 risk reward, but using 1% can be too much because that does not include swap fees, and it also limits the amount of trades you can take before going negative. And let me explain that to you. MT4 numbers, aka your broker numbers. So if you're using like MT5 or something, it's the same thing. Okay, so this is where we're going to explain broker numbers. So I want you guys to look here. We have 0.36294. Okay, and that's at the body of these candles.